Hello and welcome everybody to Crude Oil Asset of the Day for the 7th of May 2019, presented by myself, Phil Carr, at the Gold and Silver Club. So of course we'll be talking through oil price action for the week ahead and really what you need to know for this week. So first off, of course, we have seen big news out over the course of the weekend that Donald Trump is going to be imposing additional tariffs on China. And that has had an immediate impact with oil prices. In fact, WTI crude oil gapped all the way down to $60 per barrel on the Sunday open through to the Monday. And with that, we have seen a complete retracement all the way back towards $63 per barrel just within the space of one day. So what should you be aware of? Well, first of all, hedge funds and money managers over the last week, they have trimmed their net long positions. They have trimmed those to the levels that we've really not seen a change and a shift in positions here with hedge funds since February of this year. They've continued to accumulate on the long side. So this is one of the first weeks now we've actually seen the net long position slightly reduced here over the last week for crude oil. Also, of course, over the month of May, what can you expect from a seasonal point of view too? Well, typically over the month of April, it is one of the strongest months of the year for crude oil. Normally you're looking at approximately a 6% gain for both Brent and WTI crude oil over that month. And in fact, oil managed to rally at its peak last month 10%, and it did prove to be one of the best moving months for crude oil over the year so far. So oil prices, of course, up over 40% at the peak so far in 2019. We've seen considerable upside since the beginning of this year, and that's really played into normal seasonals as well, where typically the first quarter tends to be the strongest appreciation of overall price for oil, and also the month of April tends to be very strong as well. May, overall, we tend to see about a 1 to 2% gain in oil prices. This week, in fact, from a technical point of view, we're looking at a range at the moment of 60 up to that $63 per barrel level. In fact, we saw over a 300-point move just on the Monday. So with that said, what we might see here is the price start to halt and pause around that 63 level as we then await for crude oil inventory data on Wednesday, and also additional comments coming out from the US with regard to trade tariffs on China. Of course, we know any escalation in trade war tensions between the US and China has a negative impact on oil prices, and that is a very tradable event. Now, last week, the crude oil inventories showed the largest build since September of 2017. And with that, we saw an immediate sell-off with crude oil last week, breaking through support and in fact finally breaking through a very important trend channel here for oil as well. So if we have a look at the levels that oil is respecting at the moment and the recent price action that we saw last week, we've in fact broken now below this major trend channel. If you track some of the major technicals, you also want to be aware of the 21-day moving average too, which oil broke and closed below last week. We tend to track the 21 MA, and also Keltner channels as well can be very useful for oil. We broke below the midpoint of the Keltner channel and also below this major trend channel for oil prices towards the end of last week, and now we've closed below those levels, and oil, especially on higher time frames such as the weekly chart, it does look a bit more bearish at the moment. But is the low already in for this week at $60? I would say the decider for that will likely be Wednesday's oil inventories. I think you can certainly look to take advantage of trading the range. Now, often what will happen is when a previous level, a trend channel, once a supportive channel as we've got here for oil, has been broken, the price action will come back up, it will retest there the resistance, and it will roll over. So if we have a look at oil actually at the moment, oil prices, they hit $63 per barrel yesterday. They're now retracing over a 100-point move that we've retraced so far. And what we might see is sellers come back in. So essentially, those who missed out on the opportunity to sell the end of last week, they're looking for retracement. So now, with oil bouncing back from that $60 per barrel handle, which is a major level anyway, oil tends to move very well off major zones like $60 per barrel, 55, 65. So naturally, buyers have come back in at that $60 per barrel handle. Now we've had a retracement back to 63. If sellers start to jump into this trade, the sell short side, they can see it's breaking down on the weekly chart. They see hedge funds and money managers, they've reduced their overall net longs, and we know we've got trade war tensions in the background as well. From a fundamental point of view, that could lend more reasoning to sellers coming into this market. Obviously, the crude oil inventory data is one thing to watch out for. Oil is the most heavily traded commodity in the world. As such, it moves very fast. So when you are trading it, you want to be following the news, have live news feeds, just be aware of what is going on real time. Ideally, when you're trading oil, take your profits when it makes sense to do so. When you hit your major target levels, I would say that would be $60 per barrel for this week. If we see another rollover in price action and we see the price retest the lows here that we found just off the open from Sunday through to Monday, that would be a natural area that I could see profit taking happen again for oil. So what I would look out for imminently would be Wednesday's crude oil inventory data, actually also the API data, which comes out on Tuesdays as well. If there's a build on that data, which we had last week, that can also cause further downside momentum with oil. So it could provide, again, some sell short opportunities if we were to see an increase in build from that. And the flip side of that, if we see a drawdown, that can also provide support for oil. The oil inventory data tomorrow will be very important. And also you want to really keep an eye, of course, on these trade war tensions between the US and China for this week, because any negative sentiment which comes out of that will tend to have an immediate negative impact on oil. But just bear in mind right now, oil week to week tends to move within a 300 to 400 point range. We've already seen quite a lot of that range achieved on the Monday with the volatility, so we might just see some range bound trade. And I would look at the moment for resistance to come in around that 63 level. You see, if we do actually have a bear flag setting up, well actually, excuse me, we have a bull flag setting up on the chart, but we haven't broken above it. If we were to see a break and close above this upward trending channel that we've got at the moment, the upward trend being here, and then we've got this bear flag, excuse me, we've got a bull flag here, which is setting up. If we then break above that, that would lend to more evidence that we're seeing buyers come back in. Otherwise, we're just going to retest this level of resistance, roll over and make a move, likely back towards a swing low of $60 per barrel. Very tradable market. It's quite straightforward usually to get 100 to 200 points very quickly out of these trade opportunities. I mentioned last week, in fact, we were long oil and we were long oil at the start of the week. We banked profits for just under 100 points ahead of the oil inventories data last Wednesday. And then that provided an opportunity to actually switch position and go short after the data. Now, of course, we've had non-farm payrolls since then. And also at the weekend, we have had news that Donald Trump is going to impose these trade tariffs potentially on China, and that has provided some negative sentiment, which has given a great opportunity to sell short initially and then actually buy back at $60 per barrel. So with that, I would keep an eye on all of those major news events that I've just mentioned. Keep an eye on the range, $60 to about $63 per barrel. Normally week to week, oil tends to move about 300 to 400 points is what we're seeing at the moment. You want to be able to capitalize on those moves. And also Friday, we had the Baker Hughes oil rig count as well, which comes out at just approximately 6 o'clock London time, and that can also provide some nice trading opportunities for you at the end of the week. And of course then we'll have the commitment of traders data coming out later on in the week as well, and we can then view to see whether hedge funds and money managers, whether they have continued to cut their net longs or whether they've bought this dip in oil over the last week. Remember, normally the month of May does tend to be supportive for oil. Between now and really the end of the month, normally you see about a 1 to 2% gain to the upside. So normally it's not May where you have a negative month for oil prices, but just trade the range at the moment, in my opinion. So with that, I wish you all good trading. Have a great day. And of course, we'll catch you back here next week for commodity asset of the day, crude oil.